The collapse of SVB marked the largest bank failure in the US since the global financial crisis. It was the biggest of 3 US banks to close in the space of a week. And as the go-to bank for tech startups, its fall will hit the financing of tech companies at a time when funding was already running dry.
It's really about the business, the ability to generate revenues and generate cash flow. So I think it becomes more imperative for them to work harder in order to achieve that goal, so that you don't get as much cash burn.
The collapse of SVB has sent ripple effects across Asia. The bank was also popular with tech startups based in China. SVB's joint venture in China with Shanghai Pudong Development Bank has assured investors that its operations are stable and independent of its American partner.
SVB is predominantly a US bank, but this bank has played a very large role in China's ecosystem, especially when it comes to dollar-based financing. And why? Because Chinese startups can't really raise money from overseas investors in foreign currencies without offshore bank accounts. The immediate impact really is that they're going to struggle with raising any financing from overseas investors.
There would be a gun-shy approach by the VCs in putting money to work because of some of the losses they may be holding by virtue of the reversals associated with the SVB collapse. That in of itself would lead to a much more conservative approach by the VCs in funding some of the Chinese tech startups.
US regulators have stepped in to protect all of the deposits in the failed banks, but it has exposed vulnerabilities in the US banking system.
This is really a combination of what the Fed has allowed to happen, very low interest rates, right? And more importantly, risk management. The US banking regime allowed this to happen, right? Banks with assets less than $250 billion are not subject to very tight regulatory scrutiny like the big 4 banks in the US. This allowed SVB to be too aggressive with its investment portfolio and funding-based concentration.
SVB's collapse has sparked concern about the effects of rising interest rates. The Fed's upcoming March meeting will be closely watched.
The SVB's collapse was caused by the rapid rise in interest rate, because they have a classic problem of asset liability duration imbalance. They invested on the asset side long-dated fixed income securities. We had this rapid rise in interest rate precisely to fight inflation. But now, if you have bank failures, you cannot raise interest so quickly because you're going to just trigger more and more failure. So it's going to be the two trade-off that they're going to weigh.
We've seen the most drastic interest rate hikes in a very long time. That would not take place without some collateral damage. Whenever there's a shift in the interest rate paradigm, there are changes in the financial system, and the tremors that we're seeing in SVB are symptomatic of what I just stated.
Analysts say that the collapse of SVB is not likely to have a contagion effect in Asia, but it could serve as a warning.
Banks in this part of the world are not exposed directly to the failed US institutions, right? There's a few other factors as well. So most banks in Asia are funded by diversified deposits. So that means that the probability of a significant deposit outflow is fairly low. And similar to the global story, some of the banks' investments in bonds have lost value as rates increased, but those unrealized losses at Asian banks are fairly modest, and those losses are already reflected in the bank's regulatory capital ratios, and those ratios remain at good levels. Well, because of those events in the United States, we expect some tightening in credit and funding conditions for banks globally, really, including in Asia Pacific. And this means that banks will have to pay a bit more when they do borrowings from the markets. So the cost of borrowings will increase for the banks.
The contagion to Asia is rather limited. The banks in the region also does not have such a concentrated deposit base like Silicon Valley Bank. So I think that diversified funding source does help to provide more resilience to the banks in the region.